Hello. So, as I record this, China has just concluded celebrating its 75th National Day, the 75th anniversary of the founding of the People's Republic in 1949. Much in the news today, there's a lot of talk about stimulus into the Chinese economy and a lot of discussion over what effects this might have, as well as the reasons why the government is choosing this moment to inject capital and liquidity into the economy rather than having done it before or waiting. And what I'd like to do is just discuss a little bit of how to understand this. And I think the best way to begin to unpack this is by examining some of the context of recent history. So if we go all the way back to 1992, decisions taken in 1992 and 1993 at the 14th Party Congress and at the meeting of the National People's Congress in March of 1993 put in place a really radically new economic model that China followed with great success from the time that was really implemented by about 1994 until 2008. And what that economic model entailed was, on the one hand, fiscal reform that centralized revenue, that brought lots of new fiscal take into the central government, while actually disadvantaging a lot of local governments. But then also a major institutional reform of state-owned enterprises and state-owned banks. And finally, a mechanism for foreign investment that could drive export processing manufacturing and an export-oriented industrialization strategy more broadly. So this constellation of factors, about which I've written and many others have as well, really did produce extraordinarily high rates of economic growth for 15 years. Now, at the same time, China also undertook extremely important and really extensive structural reforms. And those structural reforms caused a great deal of deleterious social effects and dislocation, right? But all of that could be absorbed, so thought the state and the leadership at least, in the context of these very, very high rates of aggregate economic growth, right? If GDP is expanding by 8% or 10% or even more, 10, 12%, the rising tide lifts all boats enough and fast enough and perceptibly enough that the dislocation of laying off more than half of the state sector workforce, closing down many industrial firms, both in the state and the collective sectors, having hundreds of millions of people move out of villages into cities in search of often unstable and precarious employment. All of those kinds of social problems, massive inequality that opened between city and countryside, between different people, even within the same localities, all of that could be in some ways not necessarily papered over, but at least ameliorated or offset by this overall growth in the economy. And that was a successful bargain, it turns out, until 2008. In 2008, the global financial crisis caused exports to dry up, right? Chinese exports crashed in the fourth quarter of 2008, first quarter of 2009. Lots and lots of people lost jobs in export processing manufacturing. Lots of investment went bad. Foreign direct investment dried up to a large extent and hasn't ever really fully recovered, at least not in the same kinds of sectors. And so the government's response in 2008 was massive fiscal stimulus, right? They just put tons and tons of money into the economy in hopes that this could ward off the worst effects. And in fact, China was the only major economy to get through the 2008 financial crisis without experiencing a recession, right? So the stimulus was effective in many respects. But what the stimulus also did is it created or exacerbated distortions in the economy that have yet to work themselves out. So during that boom period in the late 1990s and 2000s, the Chinese state spent a lot of time and effort trying to reorganize and recapitalize the banks and the financial sector. They did that with a fair degree of success. But after 2008, all of those banks were basically told to lend vast sums of money to local governments for infrastructure and construction and other kinds of projects. And all of a sudden, their balance sheets didn't look so good anymore, right? Local governments were imposed upon or prevailed upon to spend massively in support of all kinds of bailouts and stimulus measures that they couldn't really afford. At the same time, progressive social reforms that had been taken up in 2006 by Hu Jintao to uh, to cancel the agricultural tax and also to put some restrictions on the collection of extra budgetary fees or illicit fees by local governments meant that those local governments didn't really have a place to turn, right? The more legitimate revenue streams that they had had and taxation streams from before 1994 had been cut off by fiscal reform. The more recent things that they'd relied on in a pinch, they couldn't do anymore. And now they were basically being prevailed upon to undertake huge amounts of new debt. And so, how did they respond? What was the overall response? Well, what quickly began to happen is local governments decided that they would use the sale of land use rights in order to generate revenue, because local governments could basically requisition land from farmers and others, and then sell the use rights to that land, not the actual freehold, but basically a kind of leasehold, to real estate developers. And those real estate developers would build housing, mostly, sometimes office space or industrial centers, but usually housing. Now, they would sell that housing to a market that was really desperate to buy. And one of the reasons why so many people were desperate to buy housing is because if you had some money in China in the late 2000s or 2010s, what could you do with it? Right? You couldn't really move the money abroad very easily, at least not legally or legitimately. There were lots of regulations to prevent kind of capital flight or movement of capital abroad, right? As people like to say, the capital account was not really liberalized. You could buy stocks in what's called the A share stock market in China. There's A shares and B shares and other, but A shares basically are the shares available to domestic investors. And the problem with A shares is that they are extraordinarily volatile. They continue to be, actually. We've seen them increase really, really markedly just in the last part of September 2024 and now into October. But the thing is, they're very volatile, and it's extraordinarily difficult to get full and accurate information about the companies whose shares you're buying. So very risky. You can buy government bonds, but they pay negative real interest. You could put your money in a savings account or a time deposit, but that pays even lower interest than the government bonds. So if you want to have any return and any kind of stability in your investment, buying real estate actually makes sense. And so real estate purchases were being done by many, many people in China, not so much as a form of, I need to buy a house because I need some place to live, but rather purchasing real estate as a store of value or a store of capital on the one hand, and on the other as a kind of more speculative investment to try to make some kind of a return. So now we have a problem of an asset price bubble in real estate and overdevelopment of real estate and too much construction. And that's really been developing over the last 15 or 16 years, since at least 2008, 2009. At the same time, we see an overall pattern in which the economy is unbalanced, as it has been for a long time, in favor of investment and to the detriment of consumption. China's overall aggregate investment is too high, consumption too low, and in that environment, too much investment is being directed by large institutional players or the state, and the overall return on investment is extremely poor. Right? So this is not good for economic growth or economic stability. And so it's in this context that a situation has really arisen since 2015, at least, that has yet to really be fully resolved. So in the summer of 2015, equities and real estate began to decline rather sharply. There was a lot of debate inside China and outside about what the best response would be. And there was generally a split between those who favored one-time short-term stimulus in order to kind of get the sectors growing again and rescue the economy and make sure the economy didn't dip into a recession on the one hand. And on the other hand, people who favored more systematic and structural reform. Now, the structural reform voices had been there very strongly in that pre-2008 period, but had been much quieter since the economic crisis of 2008, 2009. And in 2015, they held their own for a while, and the government didn't immediately inject stimulus, but eventually Xi Jinping and other leaders decided that stimulus was the way to go. And it worked. It prevented the economy from dipping into recession. It brought things back to life, and it put things back on a path of growth. And what we've really been seeing ever since, even through COVID and at other times, is a kind of oscillating pattern in which the economy gets into these periodic spells where it looks as though the real estate market or the stock market is going to decline quite significantly, that some firms or important firms are in crisis, and the debate emerges again. And every time so far, it has played out that the structural reform advocates at first seem to have the upper hand, but then more quickly or more slowly, eventually the stimulus side wins the argument. And what we've really seen since August, and I would say really since mid-September 2024, record this on the 1st of October, is that the stimulus side has won, and they've won bigger than has been the case in the past few years. And because of the perceived more decisive aspect of the stimulus program, or bigger aspect, we don't really know yet exactly what's going to happen in terms of how big the program really will be. But the perception is that this is bigger, that this is more decisive, and it is driving at least a very short-term, sharp spike in equity prices. And from the looks of it, some uptick in consumption and other key variables that we might look at. Now, the problem, though, is that longer term, more stimulus will probably only make harder the structural reforms that many believe are needed in order to unwind the asset price bubbles in equities and real estate and other problems in the Chinese economy. It also forestalls any impetus at sort of a broader reform agenda and a remaking of the Chinese economy around a bigger role for consumption and innovation and higher value-added sectors, and a slightly smaller role for manufacturing, exports, and lower value-added sectors. So basically, we have a problem in which the short-term solution sometimes makes the long-term problem harder. And where we stand today, China has again opted for a bigger version of that short-term solution. The big question is, can China grow fast enough and strongly enough economically in order to kind of grow its way out of the structural problem, or continue to grow fast enough such that any social dislocation solved through or caused by the structural reforms necessary to solve those more endemic problems can be ameliorated or offset the way that it basically was in the 90s and 2000s. It's a very high risk, high stakes game. There is no easy answer. And that's where we are today. So in the very short term, we will see, I think, the stimulus working. In the longer term, it's not so clear whether this will contribute to a more stable trajectory of economic growth or only exacerbate underlying systemic problems. So I'll leave it at that. Thank you very much for listening.